Welcome back, and joining us for a look at the equity space is Gary Boyson from Moran. So thank you so much for your time, Gary. Quite a worrying picture there in the markets today. Everything in the red, making a turnaround from yesterday's gains. Interestingly, we are seeing the platinum stocks actually being hammered, with Sibanye leading the losses there by more than 7%. What's responsible for this?
Yeah, so I think part of it is just a little bit of a risk-off trade. So we had most of the major European indices lower. S&P 500 down about a third of 1% at the moment too. But yeah, our resource index down well over 3%. And as you say, that coming mainly from the platinum stocks. So the news on Sibanye at the moment is that they've got an illegal sit-in at the Kwezi shaft. So that's Grindal West. There's 211 employees still underground. And obviously they're looking for a resolution in the situation, but that's never positive for a mining stock. And I think a lot of the platinum miners falling in sympathy as well. I think there's also, I suppose, doing the rounds at the moment, there's real growth concerns from a macro point of view as well. So I think you mentioned it in the opening. We had US jobs openings falling to the lowest level since 2021. So we can see that labor market in the US is cooling. That kind of affects just about everything. So we can see that feeding into the oil prices as well. I mean, oil is now down at $77 a barrel. Part of that is that OPEC has said that they'll raise production in the second half of the year after that OPEC plus meeting over the weekend. But part of it is also that it looks like the US economy is starting to weaken. So, we're in a weird situation now where, you kind of want the US economy to weaken so we get lower interest rates, but you also don't want it to weaken too much that it kills growth across the globe. And I think you're feeling that a little bit in the resource stocks today, just a little bit of pessimism ahead of potentially those non-farm payroll numbers that will be out later this week. Yeah, all right. And of course, other concerns also on our own GDP growth. Well, not growth, because we did see that contraction in the first quarter with most of the sectors there posting declines in activity. Anyway, let's move over to the company news that came out today. RCL Foods came out with an announcement on the unbundling and listing of its Rainbow Chicken business. We did see investors cheering that announcement. The last time I checked, it was up by 5%. Another standalone chicken business on the JSE. What are you making of that? I think it's fantastic. We're getting so many listings this year. I think it's fantastic for the JSE just in general. It's wonderful because I can go down and get free snacks at all of these listings. But at the same time, it's great to see more options arriving on the local exchange for investors. So to have another pure chicken play, poultry plays are specifically interesting for more active traders because they're incredibly cyclical businesses. Their share prices tend to move around a lot. So if you're looking for a little bit of excitement in the market, I mean, these are the kind of businesses that you find them in. So obviously, the listing is going to be pretty quick as well. So they'll be listing on the 26th of June. If you're an existing RCL shareholder, it'll be unbundled in a 1-to-1 ratio. So for every one RCL share you're holding, you're going to get one Rainbow Chicken share. We've had Rainbow on the market before, so it's just coming back to market, and then that will be unbundled on the 1st of July. So you'll see it in your accounts then. And I think the rationale for it is, there's been a lot of fixing at Rainbow Chickens over the last little bit, and it's now strong enough to stand on its own. And I think from RCL's point of view, this is, as I said, this is a very cyclical business. The earnings move around, incredibly, depending on what the maize prices are, depending on a lot of things, depending on the weather, these prices move as well. So I think RCL, wanting to focus on their sorghum porridge, the pet food, Nolo mayonnaise, focus on their core business and have this stripped out as a standalone item, I think is a good idea. And certainly as an investor, I'm feeling spoiled for choice at the moment.
All right. Well, how are you feeling about MultiChoice? Because they released, MultiChoice and Canal Plus released a joint circular today, basically detailing the terms of the mandatory offer that has been made by Canal Plus. What actually does this mean at this point?
Yeah, it's a good question. So, we didn't see much of a share price reaction to this. We've got MultiChoice still trading around, I think last traded was, 112.35. So this is a deal saying that, they're prepared to buy out at 125 Rand per share. So the market's pricing in quite a lot of time value of money in that calculation. The kind of first thing that I thought, sure, that's a long time horizon. I mean, it is a complex transaction because you're buying into the media space, Canal Plus's voting rights are going to be limited. But you understand, I mean, the deal seems like it's going to go ahead. Remember, Canal Plus has been buying up MultiChoice shares in the open market. They're above a 45% shareholder in the business already. There was kind of quite a tight deadline that had already been extended. So they had to make the circular to shareholders now, just announcing the intention to make that 125 rand offer. And I think it's interesting. They've also said that they as part of the deal structure, they are going to keep a listing on the local exchange as well. I don't think we're quite clear yet on what that listing is going to look like, whether it's going to be in the parent, whether it's going to be MultiChoice standalone. So I think exciting, definitely. If this transaction is going to go through, I mean, I haven't done the kind of like our own estimates on the probability of the transaction going through, but you're going to get 125 rand per share, and you can buy it at 112. All you've got to do is suck up the interest for a little bit. Hope the deal closes quickly.
All right. Well, let's get to your stock pick for today. What are you picking?
Yeah, so I'm going to pick British American Tobacco. They also released an announcement today as well. This is an ex-growth business, so it's not something that you really expect revenue to shoot the lights out. It's low single digits is what you're expecting. But it's a mature business. It's a massive international business, and I think for South African shareholders and for more conservative shareholders, it's got its place. Now, I'm looking specifically at the London listing, but I mean, obviously you can access this through the local exchange as well. It looks time for a little bit of a recovery. This thing has at the moment, it's around a 9% dividend yield. Their products are addictive, so let's hope that their customers keep coming back. But really, not expensive for what you're getting. And of course, for South African investors that are facing an incredibly volatile currency at the moment, this is a solid rand hedge security as well. So I think if you are looking to build offshore exposure within a local portfolio, as well as pick up a juicy dividend yield in what is a fairly low risk and stable stock, British American Tobacco, also in a world where interest rates start falling, and I mean we've got the first probably two rate cuts coming. If the market is to be believed and some of the bank estimates are to be believed, that should be very beneficial for a company like British American Tobacco that almost serves to offer a lower risk option, and give you a decent yield in an environment where you might not have the high interest rates that we're currently experiencing. So maybe a little bit of a share price rally over the next 3 years would be warranted.
All right. Well, thank you so much for your time and for detailing what has moved investors' money today, Gary. That was Gary Boyson from Rand Swiss.